Um, Welcome to part 2 of Insure Africa, Ask the Experts. Thank you so much, Chipo, Eric, and Kennedy for joining me this evening. So I'll just briefly introduce Insure Africa, what we do and what our mission is. So Insure Africa is a company that's registered in Nigeria. So we are passionate about insurance and raising awareness about insurance in Africa. So today's session, ideally we're supposed to be joined by Mr. Alfred Ludwig Kisiedu. So we're just waiting for him to come on. We have Chipo Mafaiti. I think I've butchered the pronunciation.
No, you haven't. You're spot on. Not at all.
So Chipo is the claims BI and analytics specialist from Santam in South Africa. Thank you, Chipo, for being with us. And I have Kennedy Mitambo. He's from Prudential in Kenya, and he's the actuarial manager. Then I also have Eric Ndoia. Have I got it correct?
Almost.
Eric, can you help me with the pronunciation of your surname? Ndoria. Okay, thank you, Eric. So let me just give everyone a brief intro about yourselves and what your experience is in insurance. So Chipo, I'll start with Chipo. Chipo completed her undergrad studies in 2004 and attained a BA honors in English and Communication Studies, and immediately started off her career in a broking firm in Zimbabwe as an account executive, where she focused on the financial services sector. She embarked on a diploma in insurance with the Insurance Institute of Zimbabwe to cement the knowledge gap that she felt she had. And then she quickly mastered her role and expanded to underwriting, risk management, as well as claims preparation for the top 4 banks in Zimbabwe. So within a year and a half, she was promoted to a senior account executive, and her portfolio increased to commercial clients, ranging from manufacturing companies and heavy industries such as Butter Shoe Company, Anchor East, and Zisco Steel. So she held this position until she relocated to South Africa, where she saw better opportunities in claims area, particularly with projects. And she's held various roles culminating into business supports and various projects for claims service team at Santam Insurance. With the introduction of agile methodology in project management, she expanded her horizons by obtaining the esteemed and sought after Scrum Fundamentals, as well as Scrum Masters certification. So as part of Santam's strategic initiative, she's a certified 6 Lean Sigma Green Belt, and her superpower is the ability to execute projects in their context using both the traditional or waterfall and agile methodologies. So that's a brief summary of Chipo's experience and her skills. Okay, so I'll move on to Eric. Eric is currently working as an actuarial consultant at LAX Actuaries and Consultants. In his current role, he works on providing actuarial consultancy services to clients mostly in Kenya and other parts of Africa. His current focus is on assisting insurance companies in their transition to the new financial reporting standards, IFRS 17. Eric is a graduate of the JKUAT main campus with a Bachelor of Science in Actuarial Science and the Bayes Business School, City University of London, with a Master of Science in Actuarial Management. He's a fellow of the Faculty of Actuaries, IFOA, and a fellow of the Actuarial Society of Kenya, and has completed all exams necessary for fellowship under the IFOA. So Prior to Lux, Eric worked as part of the actuarial team at Brighton Holdings PLC, and later worked as an insurance supervisor at the Insurance Regulatory Authority. In these roles, he's gained grounding on the Kenyan insurance market, and this has helped him to understand the nuances of the market, which has made great strides in the financial services innovation. Eric is passionate about leveraging new tools to make financial services relevant for local markets. And he also believes that for improved financial inclusions, it is crucial for major stakeholders to collaborate and leverage their respective strengths to come up with fit-for-purpose solutions. And he's a firm believer that new age tools such as machine learning and blockchain technology should not just be applied as magic wand remedies. He believes that they should supplement existing structures to arrive at optimal outcomes. And Eric plans to use his expertise to achieve more inclusive and efficient financial services industries in Kenya and beyond. Okay, and lastly, Kennedy is currently working as an actuarial manager at Prudential Africa. His role entails working with Prudential subsidiaries across the African continent on actuarial matters such as IFRS 17, actuarial valuations, business planning and strategy, solvency computation, risk management computations, and economic embedded values. He holds a Bachelor of Actuarial Science degree and is a fellow of the Institute and Faculty of Actuaries. He holds various achievements, among them being a chartered enterprise risk analyst, and is the current chair of the Risk Working Party of the Actuary Society of Kenya. Kennedy is passionate about climate change and advocates for planting of trees as part of conservation of the environment. And Kennedy spends a lot of his time working with the less privileged in society. Guys, you have really impressive CVs and experience, and I feel so fortunate to have the opportunity to have a chat with all of you. So I think we'll just jump right into the question session. And the first question that we have is, what local practice in Africa compares to insurance that can be used to boost the interest of people in modern insurance? So, Chipo, can I have you to comment first on this one?
For me, I would ask the question more or less in inverse on what our local practices are, or what we could import rather, because I feel that the local insurance has a lot to learn. I mean, like we've got to customize ourselves to the African context. If I look at the policies that we underwrite, we use the standard multi-mark policies, which are something that came from the Floyds of UK, you know. We've got a lot that we can actually customize that we need to bring in ourselves and not per se take out. So in my opinion, we have more to learn than we actually have to give out. If I can look, for example, at, if you look at how, for example, how underwriting is being done in the new age, you look at places like in the UK where we have people who underwrite a risk, they underwrite a time on risk. So for example, if I'm going to insure my diamond ring and I'm working from home, like most of us are, we're now like home potatoes. I want to insure my ring when I'm going out on a business trip for 2 weeks, and I underwrite my ring for 2 weeks. And when I'm back, I'm at home, I'm not doing much with my ring, then it stays at home. So we could import such things, but in Africa, we've got a tendency of sticking to the red tape, where I must insure my ring for the entirety of the time, but I don't actually need cover. For example, maybe I've got a bicycle that I'm an avid rider. I only want to have risk when I'm on the road, and when my bicycle is parked in the house, I shouldn't be paying for it. So you see, we've got a lot to evolve. So the companies in Africa are trying to learn that. But in my opinion, if I was to be brutally honest, we actually need to learn more than what we can actually export, not taking away anything from what we're doing here. But I feel we are sticking within the red tape a lot. We could do with a lot of enhancements. We could do with a lot of customizations that are in our own context. We don't have to stick to what the multi-mark says, we can customize, but I guess the appetite out there in the market is not wide to accept this customization. I don't know if it's our lack of belief in ourselves or what, but I feel we could actually tailor make products that make sense for us rather than inheriting what has been handed down to us, which doesn't really work for us. So I know I probably twisted your question, but that's my personal opinion.
Thank you for that, Chipo. Eric, you could go next and just share your views on the question.
Thanks, Chair, for the opportunity. From my perspective, how I sort of look at it is, I'm sort of agreeing to what Chipo has said in terms of us sort of customizing our insurance services to the African context. I tend to believe that a lot of these insurance services have existed over the years, and they come in the form of some social insurance of some sort, and an easy example of this is, for example, at least in the Kenyan context, if in the case of bereavement, when someone has a family member has lost their life, say organizing for the funeral, so you tend to find the community around the person comes together and provide some sort of a funeral cover for that. Or if it's in terms of medical bills, if you go on Twitter, for example, there's a lot of, you find so many appeals for assistance for settling medical bills. So in one way or another, there's some insurance that exists. So it's just a matter of adjusting the already existing framework to fit the African context. Probably insurance systems in the West, or in Europe, or in the US or Canada, or in the developed world, might not be fit for purpose for the African context. So what we need to do is sort of identify what are the unique attributes of the, could say, quote unquote, insurance in Africa, and how do we sort of formalize it or help the formal insurance system sort of adapt to that, and offer fit for purpose solutions for the African context. So I think that's the gap that exists, where the current products that are available in the market are not well suited to the unique requirements of the African insurance client. So yeah, that's my take on it. Thanks.
Thank you, Eric, for that. Kennedy, can we have your views on the first question that was posed?
Okay, thanks a lot for the opportunity. I think I also say I agree with the two previous speakers, that's Chipo and Eric, on what they've just said. On that, we need to customize. There's a lot of insurance that exists locally and traditionally within the African society, as the two speakers have highlighted. Let's say from what Erica said in Kenya, the funeral arrangements where we come together as a community, that's one example. The other one is also when we have a medical appeal where you see as a family, you get together. In Kenya, we do say we call them fundraisings, where we gather people and people just come raise money towards meeting those medical expenses. From an insurance perspective, I'll say that's more of, you are financing after the event has occurred, while insurance traditionally you pre-finance, then you get a reward for that. So it's more of building on that's what's going on. Also, in the African family, traditionally we rely a lot on our relatives and extended family to assist us when we get events. Let's say hopefully when one of our young relative passes on, the family normally takes up that role of, if they had kids and so on, to educate that and so on. While insurance, we normally rely mostly on the life cover to get you that, the life cover and so on. So I'll say that it's more of customizing that and building on that, but socially it does exist. It's more of how we'll customize it to suit the African context as well, and hopefully ensure European more people and people get to appreciate the role insurance plays. Thank you.
All right, thank you so much, Kennedy, for that. So we'll move on to the next question, which is, insurance seems to be sold by the poor to the poor. How can we change that? So the person who asked this question was saying, most insurance agents, they don't even have certain insurance products, and then they're coming, knocking on our doors, asking us to buy policies that they themselves don't have. So how do we transform as an industry when ourselves, we're not even buying these products? Who would like to go first? Maybe
I can go first.
Yeah.
I'd like to agree with the accession of the person who has raised the question, because generally insurance has always been considered as a last option resort. Like when someone finishes school or they're just fresh out of high school and they don't have a job, the first thing someone says is, oh, go install insurance, you can earn a commission from that. So the person is right about it being a product sold by the poor to the poor. However, when instances, but it's more, especially in our African context, it's more about job creation and job opportunities. I think in Africa, well, in South Africa alone, we are part of the highest unemployment rate for the youth. So it's easy for someone to just say, okay, I'm just going to walk into insurance. However, this is, it's a major problem, because in most instances, if a claim occurs, we're then trying to underwrite the policy at claim stage because it's been messed up, because the person who sold the policy didn't follow due diligence, they didn't do a proper risk assessment, and they didn't charge enough premium, or there's not even enough reinsurance on the item that's been insured, whether it's a life or whether it's a movable and immovable asset. So we can do a lot of we can make a change in this by simply requiring, but I think, like, for example, in South Africa, they have FSP requirement. For you to have, to be an advisor, an insurance advisor, you need to write a competency exam and you need to pass it. So you need to get to a point where you actually understand what you are selling. However, the gap still exists because, as you all know, this is just a matter of cramming and getting the exam through. But by setting the standards, by setting the bar, if I can look at myself for an example, like you heard in my bio, my major was a PR degree, but I chose insurance because I had a mentor who came in and said, you know what, you could really do well on this. And I realized, okay, here I am, I do have a gap and I need to fill the knowledge gap. And that's the first thing I did. So we need to just put more emphasis on training and getting the correct people in the correct position. So you do come across a lot of instances where we have fly-by insurance companies, and I'm not going to lie, they do exist. All they're doing is they want the volume. So they're willing to have a small profit return. They're pushing the volumes, but those volumes they're pushing, the quality of the volumes that come out there, that's when you have instances where people say, no, insurance is a fraud because I've been paying my premiums and at claim stage they didn't pay me out. So we just need to raise the bar, we need to raise the standard to make sure that people who are advising people, for you to be an advisor, you need to have a regulation, you need to pass a regulatory body exam. And you also need to do continuous professional development in order to know that you're still at par with what you're doing. We cannot take away the fact that insurance will always be a first choice, or selling insurance will always be a first choice for someone coming fresh out of high school. That's a blatant reality because of the nature of the competition, the nature of, you know, insurance is it's a big industry. And as it is a big industry, it also requires a big head count. And the big head count won't just appear by hiring a specialist actuary, you know. So we need to develop the grassroots labor. But I feel that if we do more training, we do more focused forums, we do more regulatory exams, we will alleviate this gap that is created, because indeed people definitely have their session, and in some instances they are right that it's just a product, you know, you're just selling me this, but it doesn't do anything. So yeah, if we put it more, if we raise the standards, not necessarily an academic standard, but also just a professional standard, to have professional bodies that govern the way insurance is done, we can alleviate part of this problem.
Thank you so much, Chipo, for that. Eric, could we have you comment on the on the question that has been posed?
Yes, thanks again. Yeah, so I want to agree with what Chipo has mentioned. But then maybe just to add on top of that, I think one key thing that we need to consider is, you know, what is a major factor that leads to poverty? Yeah, and a lot of the times you find that poverty is caused by a risk event that happens, and that forces a family to fall into poverty. Yeah, and a simple example is in the case of either illness or death of a breadwinner, or if, say, you know, a large proportion of the African population is in the informal sector. So if there's, you know, either damage or interruption to your business, those are the key causes of poverty. Yeah, and especially in this in the context of the COVID pandemic, where a lot of economic activity has been stifled, and you tend to find a lot of the progress that has been made in terms of economic improvement has sort of been affected. You find that the reason why it's easier for you know, such a negative impact of such risk events occurring is due to a lack of insurance. So, you know, before thinking of it in terms of insurance being sold by the poor to the poor, we need to think of it in terms of, you know, insurance being a tool for mitigating against the impacts of the events that can lead to poverty. And again, you know, circumstances are different. Yeah, maybe whoever is selling the policy has their reasons for not taking up the cover themselves. Yeah, but it still doesn't change the fact that insurance is still an important, it's a useful tool that can help so many people. So basically now, from the insurance companies or the insurance providers' perspective, the problem that needs to be solved now is, how do we make insurance more affordable? You know, because you know, incomes are not able to support insurance, how can we sort of redesign our products to accommodate the circumstances of the people in order to help make insurance more accessible to a vast majority of people? So I think for me that would be the key question to address here. You know, how do we adapt our products, our insurance solutions, to fit to the requirements of the, you could say, low income earners? Yeah, and there are a variety of ways in which this may be done. You know, a good example is microinsurance. It's quite difficult to achieve in practice, but it's something that can, you know, there are people who are attempting to do it, and it's sort of bearing fruits. So it's one of those things where we sort of need to come to the level of the consumer and understand their circumstances and come up with solutions that are actually helpful to them. Yeah, so thank you.
Thank you so much, Eric. I like how you rephrased the question that was being asked, and I think we can take away something from that and then see how we can build up on making insurance accessible to even the sales agent straight out of university or straight out of high school, trying to, find or getting employment from an insurance company. Kennedy, can we have your view on the same?
Okay, thanks a lot, Chere. So what I'll say is, I do agree with what the speakers did say. Before that, what like Chipo highlighted, that insurance selling is almost like a career of last resort. People just take it as a last resort. However, I wouldn't say it's mostly done by the poor people and the poor people. Unfortunately, I've had to interact with a lot of insurance salespeople. And when I joined my company, the car park used to be full of the guys who used to drive the big cars and the expensive cars were actually the insurance salespeople. So that notion of the actually poor, I think it's more of the successful insurance people training the guests and telling them there's a career out of this, because I've seen in companies where actually the salespeople actually earn way, way, way more than even the CEO from the commissions they make and so on. So that's personal experience from that. So I would encourage people. It is a good career. It's not only sought by the poor, or it's insurance for the poor people. If you just take it and if the successful agents really reach out and mentor the other ones who are joining as a useful career, then we'll change this notion that insurance is for poor people and poor people. I'm sure if you have interacted with that, I think I can see Chipo nodding on. I think from experience, you may have seen those guys, yeah. I'll say even if you are to work into most insurance company and you check the parking lots, most of them are filled by the sales agents and they are drive very big, expensive cars. So we'd call it a notion of poor people, sold by poor people only.
All right, thank you so much, Kennedy. Our next question is on life insurance, and it reads, how does life insurance work, and when should people be thinking about getting life insurance? Chipo, can I have your views? I think we'll start with you.
I was waiting for someone to go first for a change. Okay, so my take on life insurance is it's so critical, and it's such a gap that if I can be brutally honest, we as Black people have missed. If you look at, for example, I'm sorry to take it a bit racial, but hear me out. If you look at white people and how they acquire their generational wealth, they inherit money from policies. So the grandparents, the great-grandparents take out hefty life insurances. And at the time of death, the life assured is paid out, and then they if you look at a white person who's fresh out of college and a Black person who's fresh out of college, the probability that the white person is already provided for because their grandparents or their parents took out solid insurance cover is highly likely, and it's highly unlikely with Black people. We tend to think of life insurance as something that is associated, for example, if it's a compulsory element when you're buying a property on a bonded account. We don't see the bigger picture. And this is the reason why we have this curse of not having generational wealth as Black people. We don't realize that, okay, some of these things, how people are getting money as white people, it's not rocket science. It's just basically making sure that they took out a policy, they had a lump sum that was enough to leave behind for the beneficiaries. So I think I've jumped and I've gone over to the question, but I just wanted to highlight how life insurance is very important and how we mostly as Black people and mostly as African people, we totally miss the point. Because if I was to do a survey of even within our guests here at the platform, just find out what are you insured for, what are you leaving your kids? You'd find that you have a very, very low amount. You take a survey with a group of white people, you find it's a different thing. So I'm hoping that in highlighting the fact that your dependents can stay and be taken care of with a solid life insurance, we can then change our mindset when it comes to policies, and particularly life insurance policy. I do understand the gaps that come with educational policies and all, but particularly life insurance policy, because the moment you take out your policy and something happens and you happen to unfortunately pass away, your beneficiaries will get what you left them. So it's so important to have this. I feel life insurance, it's a deal breaker for me. Anyone in my circle who moves around in my circle, I always ask them, what life insurance do you have? And we're always comparing and we're saying, listen here, girlfriend, let's empower each other here. If you've got that X amount of life insurance, if you happen to pass away, would that money be enough to sustain the lifestyle of your dependents, of your children, of your mother, or whoever you're leaving behind? So I've jumped and I've gone ahead because I know my colleagues are going to answer the other part, but I'm just simply emphasizing the importance of how we can easily create generational wealth by implementing things such as life insurance. So I'll hand over to you, Eric, and you can explain how it works.
Thank you, Chipo.
Thank you, Chipo. I think those are great insights on why life insurance is important. And going back to the first question, where I sort of mentioned on possible reasons why people fall into poverty, and you tend to find that in the event where a breadwinner in the family passes on, unfortunately, you find there are so many cases where the dependents are left with not too much, and that sort of puts them in a very difficult situation. And life insurance seeks to solve this problem. Basically, life insurance does not only cover in the for compensation in the event of death, but there are also products on the life insurance side that also provide some savings elements. So basically, what the key point here is deciding on the best life insurance product for you, depending on the stage you're at life, or your specific objectives. So, for example, a simple example can be a gentleman who has a young family might decide to take up term insurance to provide cover for his dependents. And the good thing with term insurance is that it's quite affordable compared to the other life assurance products, and it helps to provide for that additional protection, in the event of loss of life of the breadwinner. But also on top of term insurance, we have other products. So, for example, endowment assurance cover, whereby it provides some savings element and pays a benefit on survival for a specified term. And for example, this might be used for, in one way might be used to provide for education benefit for your children, or might provide a lump sum benefit to pay off a mortgage or that sort of thing. So the key thing is sort of, while you're planning or while you're putting together your financial plan, it's quite important to include a life insurance element in it. And as you progress in life, you can always adjust and take up additional cover, or any different sort of life cover which you need to take depending on your circumstances. I think that's the reason why it helps, not only to protect your beneficiaries, but also thinking along the aspect of creating generational wealth, as Chipo had mentioned before. Thanks.
Thank you, Eric. Kennedy, can we have your comment on the question that was posed, which is, how does life insurance work? And when should people start thinking about taking out a policy?
Okay, thanks a lot, Chair. So what I would say is, Chipo and Eric have highlighted how life insurance works, and mostly it's more of a transfer of wealth, and you should always, it's a more of a way of creating wealth for your loved ones when you leave them behind. So when should you think about it, I would say, as long as you are an independent adult, you should start thinking about it. And what you'll do is, when you are doing a lot of estate planning and when you are thinking of ways to create your wealth and leave behind generational wealth, the moment you start, there are various types of life insurance. So you can choose the one that most suits you. You'll sit down with a financial advisor and see it. But as Chipo earlier highlighted, is that life insurance is one of the things for people should think about when they think of ways to create wealth for their loved ones. Life insurance should rank one of them. And it's actually, when compared to most of the stuff, it's the least capital intensive way to leave a lot of wealth to your loved ones. Because when you compare, let's say, to buy shares worth 1 million in advance, if you wanted to leave your loved ones a wealth of, let's say, 1 million rand when you pass on, if you bought shares, you'll need to have that 1 million in cash. But when you used a life insurance, you'll be paying very small premiums in advance in a way that will be very affordable and in an easier way compared to affording this lump sum when you want to invest in other different ways to generate wealth for your loved ones. So I'll say it's a necessity that needs to be factored when you are thinking about how to grow and generate wealth for yourself and your loved ones anytime. So there's not the right time or the worst time to start. Anytime you are doing your estate planning, how do you want to grow the wealth and so on, that's the time to start. Thank you. So if you have not started, the time to start is now. Thank you.
Thank you, Kennedy. We have a lot to think about. I personally don't have a life insurance policy.
I'm sorry, maybe if I can add.
Yeah, sure, you can.
Yeah, just an additional point. Whenever we're thinking about life cover, at times we make the error of looking at it as an outright investment solution. Yeah, and of course, yeah, as Kennedy had mentioned, it should form part of your estate planning. But life cover provides at least that basic protection, so that, you know, instead of starting off from point zero, you'll at least start off from, you know, at least a point where you can comfortably progress, yeah, at least from a financial point of view. So we should. My point is that maybe let's not look at life cover in terms of what potential, you know, investment return or investment gain I can make from this, but look at it from the perspective of what sort of protection am I getting for my dependents by taking up this life cover.
Thank you, Eric.
Thanks.
So this question, I would like Kennedy to comment first, then Eric, and lastly, Chipo. So one of our viewers or one of our followers asked the question which is, what's the work that an actuarial scientist does? And what positive impact does it have on the work of an insurance company?
Thanks a lot, Chair. What I would say, the role of an actuary is mostly widespread. It's not traditionally what actuaries used to do. They used to work in life insurance companies and general insurance companies. Also, further, we used to work in pensions, but with time and with evolution, actuaries are working in various fields. Like I would say, people will be aware, actuaries do work a lot in banks in South Africa. We also have, like as I'm saying currently, I'm a risk specialist besides being an actuary as well. So the role of actuaries is very wide. I wouldn't define it in a single line or anything what we do. But basically from an insurance perspective, I would say what actuaries do is we normally design the products and the solutions that we offer to our clients. Actuaries are mostly involved in that. The other one is we do value. We do something called actuarial valuations for our companies and seeing whether the insurance companies are solvent and so on. And also, as Eric could point from his area role as a regulator, insurance regulator, the government expects actuaries to ensure that actuaries value insurance companies so that they are on sound footing and they're able to meet their customer needs. So it is the duty of, in an insurance setting, for the actuary to ensure that the company is meeting what is promising the customers as well, and it has the means to do so. Further, we advise our companies on investments and so on, what roles to do and how to match them and so on and so on. The other one is also from actuaries, we also work with other stakeholders. I would say like we also work with people like Chipo and claims. We also work with underwriters, guiding them on the best practices and so on. We also work with everyone. We partner even with salespeople. I've worked with salespeople to fine tune and work and so on and so forth. So I would say it's a limited role. Thank you.
Thank you, Kennedy.
Thanks. So I think Kennedy has captured it quite well in terms of the work that an actuary does. But maybe to stress a bit more, in a very simple way, what an actuary does is sort of place financial value on risk. And insurance business is about transfer of risk from the policyholder to the insurance company. And with this transfer of risk comes some financial obligations. So how do you sort of quantify this financial obligation? And an actuary's job basically is to come up with a way to understand this, the quantum of this obligation. And as Kennedy had mentioned, we help companies to understand the financial impact of risks. We help companies to sort of assess how much capital they need to set aside for payment of their dues, claims and so on. But then also on top of that, we help companies to understand how much premiums should be charged for certain risks. Yeah. So actuaries are useful in a wide variety of fields in the insurance space at least. But then also on top of that, we are working in pensions and banking. So for example, like at Lux, we have a banking consulting wing. Yeah. So we are sort of spreading our wings into other areas. But also on top of that, especially in recent years, there's been a lot of focus on additional aspects or additional areas where actuaries can focus their energies or their talents in. And this is a lot more on the soft skills because actuarial tends to be quite mathematical. So for an actuary to be effective in the field, we need to sort of equip ourselves with additional tools. And maybe I can quote one of the great actuaries in history. It's called Frank Reddington. So he said something along the lines of, an actuary who's only an actuary is not an actuary. So, by that he meant that actuaries need to also take on additional skills and additional tools in order to be effective, because we are not working in a vacuum. We work in a society that has its own challenges, its own unique characteristics. So, for example, in recent times as well, there's a lot of focus on climate change and its impact. Climate change will have quite a huge impact on insurance companies. And a simple example is in the agricultural insurance sector, where the expectation is that due to high volatility in weather conditions, it's quite likely that farmers will experience losses in their yields. So how will insurance companies adapt to that? Yeah. So in addition to the technical, mathematical, stuff that we need to know, we also need to learn about the context within which we are operating. And this calls for creativity, calls for leadership skills, calls for effective communication, because you're dealing with so many other sectors, and so on. So yeah, so that's my take on what an actuary does.
Thank you so much, Kenneth. Eric, sorry, thank you so much. I think you've really broadened what my view of what an actuary does, and I've gotten a better understanding. Thank you for that. Chipo, would you like to comment on the role of an actuary?
Yeah, well, in my experience, particularly in the claims project, our actuaries are human bots. They're the moving algorithms, always busy with the analysis, the mathematical calculations, bring the statistics, doing the reporting, and just basically sizing and weighing on the risks. I find it's a very challenging field, and I'm quite interested to see how it's going to go with all these, how this world is evolving into, everything is basically an algorithm. So I'm interested to see how the actuarial science will develop with the world of algorithms, where everything is computed into a computer. And but like what Eric was saying, I agree with Eric. The difference between the algorithm and the computer and Eric is that Eric has human feelings, and Eric can reason in a human aspect. It's not all about maths. But basically, that's the difference between, in my opinion, an actuary and an algorithm. But it's a lot of reporting for me. So my experience in terms of the claims project is a lot of reporting and a lot of financial weighing on the risks, whether it's a go or no go for a particular project or a particular type of policy, or should we be phasing this out due to the trends and the financial impacts that we're experiencing. So if somebody is interested in that kind of thing, is a very analytical and a skilled mathematician and a skilled statistician, I would recommend you go for an actuarial sciences course or degree or whatever you want to do. Yeah.
Thank you so much, Chipo, for that. So our next question is, considering the high levels of poverty in Africa, how can insurance companies define affordability to make sure that there is an equitable distribution of insurance products? Eric, can we have you go first this time?
Okay. Yeah. Thanks, Jared. So while we are considering the issue of affordability in insurance, we need to ask why is insurance not affordable? Why does a vast majority or quite a high number of people find insurance expensive? And the reason for this is that the cost of providing insurance tends to be quite high, and this is for a variety of reasons. There's the issue of fraud, which is quite big in insurance. There's the issue of inefficient operations. So you tend to find, because of all the red tape, you have to sort of go from one desk to another, fulfilling one requirement after another, and this incurs a cost. So from that perspective, that's what makes insurance costly. But then on the flip side, another reason why insurance is expensive is could say a lack of scale, and we can see this from the relatively low insurance penetration. So for example, in Kenya, we are at below 3% insurance penetration. So you tend to find many companies, we have so many players in the market here, and with that comes the challenge of taking advantage of economies of scale. So with that, with the high overheads and so on, the providing insurance service becomes expensive. But then now, at least with the innovations in technology and developments in technology, I think this is a challenge that can be overcome. So, for example, using the cloud, for example, insurance services can be scaled up and can be made more accessible to a wider market through mobile. Accessibility has been made easier. Through data analytics, we're able to do fraud analysis and sort of detect fraud before it happens, so on and so forth. So first, there's the step of understanding why insurance is expensive, and using the available tools, and especially on the technology side, to help push these costs down and make insurance more affordable. Thanks.
Thank you, Eric. Kennedy, could we have your comment on the same?
Thanks, Chair. What I'll say from making insurance affordable, what I'll say, I think Erica summarized that. One is to ensure that insurance companies are able to cap their costs, and hopefully they can pass that benefits to a few customers. The other one, I would say insurance would more of, I think, as part of corporate social responsibility, insurance companies can use that to subsidize and assist the poor people at least get better benefits, because I think poor people do pay a poverty. There's something called a poverty premium that normally increases as you attend to poor regions. I would say when you compare someone in a slum and someone in a rich neighborhood, when they come for you to insure your car, you'd price someone in the slum as more risky because their car is most likely to get stolen than someone who lives in a rich suburb. So that's one thing that we'll need to check for the government also to intervene in that and ensure that it provides some of those things. It works on those aspects that make people be described as poor, and they are charged a higher premium and higher risk premium than the rich guys. So that's one thing I'll say also you assist on. Yeah, then the other one I would say it's also ensuring we can pull more people. Insurance is a game of numbers. So if we are able to loop in more people through micro insurance and so on, then we could probably bring the cost of insuring the poor people and ensure we reach them out as well. The other one would be the point that Chipo talked in from the start. We are, instead of a person paying an annual premium in advance, then they're allowed to pay S and when you go, then that would ensure they can also access and be able to utilize use services as well at an affordable fee rate that's them, such that when they are paying, when they are using it, then it makes them more affordable to that product than, say, when compared, you have to pay a premium annually and also in advance. So that's what I would say. Thank you.
Thank you, Kennedy. Chipo, could we have your comment?
Okay, sure. Okay, so I think priority should just stem from what your asset base is, because the more you acquire, the more the need will be for insurance. Even you can get away with, like what Kennedy said when I mentioned earlier, you can get away with establishing a fund to sort of self-insure on certain items, but there are some non-negotiables, especially when you begin to purchase assets. Insurance should really be high on priority, and it should also be based on what type of policy you're taking up, because you should be in a position where you should be able to take up a basic policy that will reinstate you into the position you were in prior to the loss in terms of your asset base. But at the same time, you can also minimize your costs by not taking the luxuries. For example, you minimize what you're going to put on all risk insurance. You put limited, if you're only going to put your laptop and your cell phone and your wedding ring, and you remove everything else on all risk, but making sure that you've got the basics, the things that are of high value definitely need to be covered, and they're definitely a high priority, because it's better to be reinstated into the position you were in rather than to start purchasing a high valued item all over again. So in my opinion, especially in the African context where behind criminal activities are happening, whether you're in the burbs or you're in the slums, crime is everywhere. So for me, and like I say, particularly in our context in South Africa, the first thing I do is make sure I've got insurance and I'm adequate, I'm not underinsured, and have an armed response, because the probability that crime is going to get to someone who lives in South Africa is probably 80% and above due to the high crime rate. So it's a non-negotiable for me. As long as you are attaining any form of an asset and a high value asset, you've got to insure it, because in event of a loss, you cannot, for example, if your car is written off, what's the probability that you'll have 400,000 Rand lying around to go and purchase another Mercedes, rather than having it go through the insurance channel where you've been paying a small amount contributing towards the pool, and you are then compensated or reinstated in the event that your car is written off. So for me, it's a mindset. It's a matter of a mindset. Matter where we have to get to a point where we realize that insurance is high priority and insurance is non-negotiable, especially in the world that we're living in now, where you like Eric is mentioning, there's climate change. Previously we were not affected. For example, here in South Africa, we didn't really get tsunamis. We were not affected when the typhoons come, but of the recent years we've had an influx of flooding of households, and people have lost a lot, and a lot of those were uninsured risks, and they were not able to reinstate their properties, and the bank, if it's still a bonded property or a bonded asset, will still require its money at the end of the month. So you're better off contributing a certain amount, so that in the event of the unlikely or unfortunate event that a loss does occur, you can be compensated. So I think it should just be high priority, and we need to do a serious mind shift.
Thank you, Chipo, for that. And our final question will be on what are the ways that technology can help reshape insurance in Africa? Who would like to go first? Kennedy, is it possible that you could lead us on this one?
Okay, thanks, Chair. So what I'll say in terms of technology reshaping insurance is that as we go advance and we becoming more advanced, I think like now currently the latest trend and current, every company wants to go digital so that it can reach out to many people and all that. So technology is good, and it will actually help us reach most clients, many clients, in that we can employ through distribution, in that we reduce cost. If we use a lot of technology and selling, we can use mobile. People use USSD, they can use apps where they self-service themselves, and that costs costs as well. And it also helps reach a wider audience of many people. Nowadays, you can use even social media, such as WhatsApp, Facebook, and so on, to reach out to clients. So the other aspect is that we can improve a lot on how we interact with our customers through the use of technology. You can send them updated statements. They can know what they need. If they have queries, they can reach you guys. They can reach companies on time quickly. Especially in Africa, the most technology will be most based on mobile phones. So if we can capitalize on that and then smartphones and so on, then we'll be able to upscale the reach of insurance and reach and all that. Further, it can also be used for quick claim settlement. I think you can use like a drone or send when you have a claim assessor, instead of the assessor coming to the site a few days later, the person who is involved in that accident, you can just take photos, you send them to the claim assessor, they are assessed, and they direct you to take and what to picture and so on. and that you're able to settle even that claim faster without delay. So it will really utilizing technology will really help us revolutionize insurance in Africa. Thank you.
Thank you, Kennedy. Eric, can we have your comment on the same?
Thanks. Yeah, so from when I used to work at the regulator and whenever I used to talk to the various insurance players in Kenya, you'd find many have very ambitious technology strategies, and often at times, I don't know if this is the case in other parts of Africa or in other parts of the world. The strategies are very good on paper, but when it comes to the practice, it's quite difficult. So at least I think a blessing with the COVID pandemic is that it sort of forced companies to accelerate on the adoption of technology in various spheres. Yeah, whether it's on their internal operations or in how they deal with the customers and so on. So I think that's a we could say it's a blessing in disguise from the pandemic, and we should take this a step forward by actually pushing this technology to the next level, whereby it helps companies or helps clients easily access insurance services. It helps with the distribution of products. We should move, well, in my opinion, I think we should move away from that physical face-to-face sort of engagement at the branch level and move to digital platforms. From the insurance company's side, I think it's also beneficial in terms of reaching clients, because the challenge has also been reaching the grassroots. So, should companies sort of leverage partnerships with technology providers in order to reach customers? Yeah, because now with the internet and with mobile technology, you can, a potential insurance customer should be able to access insurance products with the tap of or with the click of a button. So how do we take our services to that next step? But then also on top of that, it should help with, technology can help with aspects of knowing clients better, especially since there's this, especially if clients' expectations are not met, it tends to paint a bad image of the insurance industry. So if companies are able to use technology to understand their customers better, it can also help on the customer service and customer experience perspective. Yeah, so there are so many ways in which technology can help to make insurance better, especially in Africa.
Thanks for that, Chipo.
Okay, so in my opinion, technology should be used to proactively manage risk. So when I say this, a lot of people then begin to say, but why do you want to proactively manage risk when I'm paying a premium for the risk? But obviously, as insurance companies, we're not inviting claims. We are going to compensate you in the unfortunate event of a loss, but would also like to manage the risk to make sure that we keep charging an affordable premium for that risk. So for me, technology, anything that does any proactive risk management, such as telematics, monitoring driver movement, even proactively looking out for the weather and warning, giving people a heads up. I feel that insurance companies should invest more into this proactive way of mitigating the actual loss. And I believe that if there is a compensation that comes as well with the clients taking up this proactive management of the risk, it will be a break even, meeting halfway. So I feel technology, especially proactive technology, the drone surveying, the telematics, you know, the tracking, always giving up a heads up. If you see that there's a pile up on the highway, you quickly inform your clients, you know, that you can see are driving that direction. This is, the proactive aspect is also linked to a lot of then personal privacy issues, which have been raised with a lot of our clients. You know, they say, okay, you're in telematics on me, but so it means you know where I am all the time. But I need to know where you are so I can manage what's happening with you. So for me, anything that's proactive is going to be the future of insurance, and it's going to be the winning solution to anything whatsoever, because once there's strong proactive management through technology, premiums will definitely come down, which comes back again to affordability. So if we get a lot of things proactively, then technologically, then we should be in line with providing affordable insurance to all.
Thank you for that, Chipo. Do I still have you guys on? I seem to have lost Chipo. Eric, are you still on?
Yes, I'm here. Yes, I'm still on.
Yes, I'm still on.
Okay, sorry about that. I think it's my connection that was a bit shaky. There's so many takeaways that we we have from this session, and so much information that has been shared. And I hope that the people that are subscribed to our page will be able to get a few takeaways from it, and you know, develop ideas around what we've discussed. And I think I'd just like to take this moment to thank you guys for taking the time out of your busy schedule to sit with us and have this conversation with us. And hopefully we'll meet again in the same manner and continue interacting and sharing ideas. It would have been nice to see Kennedy. Yeah, you guys could unmute yourselves and we can just, you know, part, and maybe if you have any parting comments to share with us, you could feel free to just say something to the people watching and the people who watch.
Okay, I will start as usual. Thank you so much for tuning in, to everyone who's listening. And I hope you got a bit of pearls of wisdom from our wisdom as well. And as Kennedy previously highlighted, insurance is not sold by the poor to the poor. We're actually rich, we drive very nice cars. But it is such a fundamental necessity, and it's such a solid base to securing our future. And we need to have, like I always will preach, the mindset shift to start thinking of insurance, start doing a bit more research. You know, don't just listen to what the cliche is said about, oh no, but then, because there'll always be a sad story that will come out that is not adequately researched. Always do your research well enough, and to know what products you need. If you're struggling with something, you can speak to a financial advisor. We can tailor make something for you, but insurance is not something to be shied away from. It's not some foreign ideology. It's actually a reality, and a reality everyone should have. So that's my parting words.
Thank you, Chipo. Eric, you can go ahead.
Yes, thanks. Thanks, Jenna. Yeah, so I think maybe from my end, what I can say is, you know, risk is something we have to encounter on a daily basis at every moment. So Insurance is a tool that we can use to sort of manage that. And insurance done well will always be of great benefit. So as maybe adding more to what Chipo had mentioned, it's good to do your research. It's good to educate yourself on what is there in the market in terms of insurance solutions. So yeah, try to get as much knowledge as possible, engage the market as much as possible to see what insurance solutions best fit your circumstances. And with that, at least you'll get the benefit of peace of mind. Because I think at the end of the day, that's why insurance is there. It's meant to give you peace of mind so that you can live your best life. So yeah, that's my parting. Thanks.
Thank you, Eric. Kennedy, are you still on?
Yeah, I will say thanks a lot, Chair. I would also say I've learned a lot. Thanks for organizing the session. And thanks a lot to my fellow panelists, and also very grateful to Insure Africa for organizing this. And I'll say congratulations for the good job you are doing, and let's keep doing this and marketing insurance, for it will benefit the entire Africa continent in the long run. So thanks for the good work and keep doing it, enlightening everyone and organizing these sessions. Apologies, I couldn't put on my camera. I got home a bit late, so I was a bit unkempt, but next time you'll see me, but you can also see the poster. Thank you.
Thank you. Thank you, Kennedy. Thank you so much. Thank you so much, guys. We'll keep chatting. Thank you.
Thanks, bye.
All right,
Thank you.
thank you. Bye-bye.
Thank you. Goodbye.
Bye.